Hey, what's up guys? John here. On this channel, I've talked about real estate investing for the last couple of years. And the last year and a half, I've kept saying that I believe it's a very big bubble. And I think that we're going to see one of the biggest rug pulls that we've ever seen in history. And now a lot of YouTubers are saying the same thing. They're jumping on the bandwagon the last 6 months. But the reality is, the reason that I was saying this is because I think that what we are starting to see here unfold is the biggest rug pull. I believe that they were setting the stage for an easy economy with very, very low interest rates and a stimulated economy, free money, easy money, and really painting the picture that things are much, much better than what they really were. The reality is that now all that illusion's fading away, and now what we're going to be stuck with is higher property taxes, higher insurance costs, higher property maintenance, and falling rents coupled with a massive wave of rent delinquencies. We're stepping into this affordability crisis, and the old saying that the best way to hedge against inflation is by buying real estate, I think could turn to be the enemy for many landlords. I think what we are going to start to see is defaults and foreclosures at levels that we've never seen before. I think it's going to be far greater than 2008, but during 2008, you look at what happened. Smart money, 2008, 2009, 2010, ran out there and started buying deals for pennies on the dollar. And that's what we're going to be looking at here. On this channel, I talk about personal finance and real estate investing. And you want to invest when there's blood in the streets, like Rothschild said. Rothschild said that you want to buy when there's blood in the streets, even if it's your own. And to me, it looks like we are starting to walk into this right now. Take a look at this, and please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's going on in the housing market. Wall Street landlords in the U.S. are squeezed by a surge in tax bills. In Texas, American Homes for Rent, they're going to see a 20% surge this year. 20% surge this year. Rival Invitation Homes, they're going to see a 7 to 8% surge due to Florida and Georgia. So taxes are going through the roof. This one landlord here in the Sun Belt says that he's getting rid of a 60-unit building simply because he can't make money with it anymore. It's impossible due to rising costs and rising property taxes. You look at Minnesota, the average home taxes are going up about 15%. You look in Washington, Anacortes, they're passing a new tax on property owners. And so property taxes are going to be going up there. You look at what's happening in Palm Beach County, they're increasing taxes $270 million. The property taxes are going to be going up a lot. New Jersey, are your rising taxes going up? Because pensions costs are rising 9%. You look in Austin, they just passed, I believe this is yesterday, $350 million affordable housing bond, which all property tax, it's going to be factored into property taxes. So property tax is going to be going up in Austin to fund this. You look at mortgage rates right now and here's a really, really important aspect to housing that a lot of people don't factor in. When interest rates are 3% and they go from 3% to 8%, what ultimately happens is you're going to have to make about 40% more to afford and qualify for the same mortgage. And the average credit score in America is a 698. By the way, if you need help fixing your credit, call us at 561-430-5900. Go to CashNow.Video. We can help you fix your credit score. The average credit score in America is a 698. So what does that mean? It means an 8.6066% 30-year fixed rate mortgage. So you have rising costs to borrow money, and now insurance is going through the roof. You look at this, 10 states where home insurance rates are rising the fastest, and none of them are New York and California. Surprisingly, Florida didn't make this list, but Alabama, 18%, Washington, 18.1%, Colorado, 17.5%, Texas, 16%, Oregon, 15.4%, Arizona, 14.8%, Utah, 14.1%, Minnesota, 13.9%, North Carolina, 13.7%, Illinois, 13.6%. However, this insurance expert says that he believes that some industry analysts predict the average homeowner will spend 40% more on property insurance next year because of the storm. And right now, I'm in Florida, and there's another storm coming here right now. So I believe we're going to start to see property insurance skyrocket in Florida. There's no doubt about it. Even before the Hurricane Ian unleashed its wrath in the Fort Myers region that drenched Central Florida and devastated Florida floods, Florida's home insurance market was already buckling under the weight of fraudulent and roof replacement schemes and reinsurance costs and litigation. So what people were doing is they would have contractors, people knocking doors, just door knocking, general solicitation, and saying, you know what, we can fix your roof, we can give you we can do this for free. And the property owner's like, hey, that sounds great. You're going to give me a free roof? Okay, sure. They sign a contract, and then ultimately what happens, they file a lawsuit to the insurance company saying, hey, you need to replace this roof. There was hail damage. There was damage over the years. And the insurance company would say, you know what? It's going to cost us $30,000, $50,000, $100,000 to actually fight this. So instead, we're just going to write a check for $20,000. Now that's happening in mass scale. And so insurance companies are writing out large checks to all these different property owners throughout Florida. So there's large litigations and scams that are occurring. Just this year, 6 companies, FedNat, Weston Property, Casualty, Southern Fidelity, Lighthouse, Avatar, and St. John's Insurance stopped operating in the state according to Florida's Insurance Guaranteed Association because they couldn't pay their debt. The Insurance Information Institute also said 27 other companies were in the industry watch list before the hurricane over concerns about the financial health. The fact that so many companies were in this financial position gave us worry at the time, said Insurance Information Institute spokesman Mark Friedlander. And now, with the expense pressure of claim filings combined with expected high levels of litigation related to Hurricane Ian, this could drive some of these smaller struggling insurers out of business, right? And so we look at that, and now 3/4 of renters are behind in these 3 states, which are South Dakota, Alabama, and New Jersey, right? So it's not just those 3 states, because right now it's about 6 million renters. They're saying 6 million renters, about 15%. So out of 100 renters, 15 are not paying rent. So when we look at this data, they're saying rents are starting to fall across the U.S. and they're starting to drop even more in 2023. We start to look at some of this information. What are we going to see? We're going to see landlords starting to say, you know what? Look at this. October saw rents 39 of 44 big cities. 39 out of 44 big cities. Landlords are going to start saying, you know what? Landlords that have the margin, that have low debt levels on their properties, that can move and pivot, they can pay the increased taxes, increased insurance costs, they can take less rent. Those landlords are going to start saying, you know what? Yeah, sure, rent for this 1 bedroom is $1,800 or $2,000, but I'll take $1,500. I'll take $1,450. Give me 6 months up front. Give me 9 months up front. And they're going to be looking for those tenants that can strike that check, because that peace of mind is worth it. If that one tenant misses rent in 1 month, they would already get that number anyway. So they'll get peace of mind and they'll accept 1 month's loss to secure a tenant that they know for sure is going to pay, because they've already paid in advance. Now that's what I think is going to happen. I think it's going to be a rush to the bottom. We're going to start to see a lot of landlords that have that margin. They're going to start offering deals, discounts. They're going to start doing what they can do to secure the better tenant. If this continues to increase, and which I think it's going to, I think we are going to start to see more and more rent deficiencies. We're going to start seeing rent declines. We're going to start to see tenants defaulting on rents. And what's that going to do? It's going to push landlords to get creative. And I think there's going to be a lot more landlords coming to this market, simply because if property valuations are starting to fall, what are they going to start to do? They're going to start to ask themselves, what are my options? I have all these new costs. They're either going to rent their property out or they're going to sell it for less money. I think we're going to see a lot more inventory hit the market. And I think with that new inventory, there's going to be a lot of desperate landlords and a lot of people that are just fighting to fill their units. And the people that have the cash, the people that have the equity, they're going to do what they have to do to try to keep the lights on. I mean, this is a pretty interesting situation unfolding. And I think that what we are going to start to see here over the next 6 months is Jerome Powell continuing to increase rates. If he continues to increase rates like they're talking about, I think we're going to start to see interest rates on 30-year fixed rates going to 9%, maybe 10% over the next 6 months. If that does happen, the cost to buy a $400,000 house, a $500,000 house, I mean, you might spend $6,000, $6,500 on a $500,000 mortgage. Like, you factor in with property taxes, insurance, utilities, that is a ton of money. You'd have to make 15 to 20 grand a month to be able to afford just a little bit above the average median home price in America, if everything continues to rise and interest rates continue to rise. Because just right now, if you were at an 8% 30-year fixed rate on a $400,000 loan, you're probably looking closer to $3,000 a month. And that goes to 8, then you go to 9 to 10%, maybe you're closer to 4 to $4,500. Then you add in the property taxes, insurance, utilities, maintenance, landscaping, repairs. You start to factor all this stuff in, you're getting closer to that $6,000 mark. That is a lot of money. That is a lot of money for people to be able to afford. What I think is going to happen, values are just going to come down, and then when values really start to tank, Wall Street investors are going to jump out and start buying. and then they're going to turn them into rentals. So that's how I see it all working out. But I personally believe there's going to be tons of opportunity for the smart and savvy investor that are just paying close attention. They're paying very, very, very close attention to the real estate market, the housing market, all of the big curveballs that are coming so that they can invest in accordingly and make smart, educated decisions. What do you think about this entire situation? Drop it below, hit the like button, subscribe here, and subscribe to my second channel. It's an interactive call-in show and a podcast. And LinkedIn, Twitter, Instagram, TikTok up in the banner. If you want to fix your credit score, we would love to help you. We'd love to help you at 561-430-5900. Give you a free consultation. That's 561-430-5900, or go to CashNow.Video. See you guys in the next video.